So welcome back guys. Today I'll be making a breakdown of my three major trades I took this week, which is that of the Euro USD, NZD USD and the Euro CAD, which I posted the trade on my channel if you have been following. So let's get straight into it. So starting from the Euro USD trade, let me clear my chart. First thing first, as usual, we will try to check the hour time frame to see what's going on. If you have been following through my YouTube channel, you would observe that everything is based on top-down analysis. So first thing first, let's visit the weekly time frame and the daily time frame to know what's going on before we determine our bias. So on the weekly time frame, um, as at last week, we would observe that, according to some few major criteria we pay attention to where the price is, where the price is coming from, and where the price is likely to go to. So according to the weekly time frame, the price is currently reacting off this weekly level, which is also a resistance level or rejection block. So let's just annotate that out. So that's what we have on the weekly time frame. While on the daily time frame, on that same level, it is still aligning with the rejection block. So we have it that way. So we've identified where price was at that point in time. Then we want to know where price is likely to go to. But before we know where price is likely to go to, we need to know the kind of liquidity that is being taken before price got to that level. So first thing first, you would observe that on the weekly time frame, before price got to that level, on the weekly time frame, you would notice that we had this weekly candle, which is this weekly high. So meaning if price will actually take out this weekly high to react from a weekly level, then we'll be seeing this place as the previous week high taking, while on the daily time frame we'll be targeting price to at least get to a previous day low, meaning daily candle that actually swept that weekly will be approaching that previous day low. So but at least for a minimum target, should be expecting that price should get to all these previous days internal structure. At least you should be expecting price to get to at least all this previous week internal structure right here, which is this low, this low, this low. So at least we've gotten a perspective of where price is likely to get for now. So let's just mark that out. So basically, we are now trying to know what to do to engage. So when price landed on that level, be going straight to a lower time frame. Now observe something. When price took out this previous week high, so observe something. When price took out this previous week high, price was still heading strongly bullish to the upside. We have this impulse, correction, impulse, correction, impulse. Now, when price got to that daily level, right? Price is something right here. Let me try to separate the days so that you can see it. So, when price got to that daily level, right here, price retraced as usual, but it was unable to create a new high. So you notice this retracement even got to discount level, if I'm not mistaken. Yes, you can see it retraced towards the discount level, but it was unable to create a new high. So this makes this place a what? A change. So this makes this place a kind of giving us a hint about a shift in market structure because price was unable to create a new high. So we see that place as a kind of failure swing, a kind of failure swing. So from that fact, the price was unable to create a new high at that level and broke structure right here. So now be paying attention to something. Though this particular kind of entry is not something I've explained on this channel before, but pay close attention. The normal one we have been used to is price creating double break of structure and all of that. So now in this point, we have a high, a low, a high, a low, a high, a low. Price unable to create a new high for a shift of market structure. So in that case, you just wait for price to come into this high, to sweep into this high and create a mitigation to confirm that that bias is, because it is still likely that price can still create a new high, right? So instead, wait for price to take out this particular high and have a mitigation, a proper mitigation of the other block or whatsoever supply zone that has been created. So once you have that, with your whatsoever candlestick confirmation that you know of, you can take your sell position. So let me just give away one. Once price mitigates that level, you can wait for price to close bearish. Once price close bearish, you can sell off, right? You can sell off once price close bearish, or if it is engulfing, you can sell off from there. So for this, you can put your position right at the rejection block, or take your position immediately the next candle opens. So that's something you can take on. So now, based on targets, where is price likely to go to? Remember, we are targeting some internals, right? Internals of those daily time frames. So we have this as a target, this as a target, this as a target. So collectively, everything is looking like a what? Like a trend line liquidity. How do we identify a trend line liquidity? When we have multiple touches creating the dynamic support. So that is what we call trend line liquidity. So trend line liquidity has been built already. So what do we have? We expect price to come and take out. So we expect price to come and take out our what? Our trend line liquidity. First target, second target, and what? Third target. So how do we know that this will be our first target? So now how do we know that this will be our first target, second target, third target? It's basically the touches of those trend line. And you also notice that most of those touches are also looking like a relatively equal low as liquidity area. So that is also a point to take note of. So as you can see, price matched the target and boom. So that is what we have on the Euro USD. So now let's go straight to that of NZD USD. So same thing over and over again. Let's just clear these charts. Like I said, higher time frame first. Always check the higher time frame to know what's going on. So from the higher time frame, where is price coming from, and where is price likely to go to? So at that moment, while I was analyzing, price was basically testing this weekly level, more like a weekly breaker block, plus the fact that we have been having some weekly order flow right here. So on the daily time frame, what do we have? It is also this daily breaker block, this whole block right here. So that's where price landed into. But before I take any position, I need to know we've gotten where price is. So where price is coming from, we've gotten it. Then where is price likely to go to? We need to know the kind of liquidity that has been taken into that zone first. The kind of liquidity that is being taken into that zone first before we can know our target. So according to the type of liquidity that was taken into that zone, this is a previous day what? This is a previous day high swept into that zone, right? So for a previous day high, if you are getting a reversal setup right here, previous day internal as usual. So let's just go straight to the lower time frame to see the detail, right? So when price took out that previous day high on the weekly time frame, on the daily time frame, we've gotten our breaker, right? Then on the on the 15 minutes time frame, for our confirmation, it's just like that same idea of the first confirmation I explained for the Euro USD. this one is not the double break idea, so you still have to practice this for you to get the hand of it. So we have impulse correction, impulse correction, impulse correction, impulse. Now when we had this correction, price price did something here. Price retraced a little bit, and this high was unable to create a new high. So price was unable to create a new high at this level, so that's a failure swing, or commonly called shift of market structure, or anyone you call it. So, and there was a break of structure. So now, due to the fact that we want this particular zone to hold, but what if price retrace and create a new high? So before we do that, we want to ensure that this high is protected after the failure swing is liquidated, which is this swing high. So now, having noted that that particular zone is already protected, like I said, with the single candle idea I explained the other time, once you have that mitigation, and remember, once you have that mitigation, bullish candle mitigating into that level, once you have a bearish close of the next candle, it is even more probable if that bearish candle is actually sweeping that bullish candle, just like this. So from there, you can actually set your entire market execution, or you can even wait for proper break, depending on your choice. You can wait for proper break of market structure here and execute right from here and put your stop loss. But for early execution, you can have it right away at this level and put your stop loss here. The major reason for the confirmation is just to ensure that price doesn't sweep this particular high, because if price takes out this particular high, then the confirmation is useless. That means it is not a real failure swing. A real failure swing or shift of market structure, after price is unable to create a new high, it will break structure, then liquidate that high. Once it liquidates that high, respect the initial order block that was created, then give a confirmation candlestick and sell off. So that's basically it for that. Then according to where price likely to go to in terms of targets, price took out what previous day high, price likely to target a previous what previous day internal. So we have this internal low, and also collectively price is what price is forming a trendline liquidity right here. So as you can see, for every kind of pullback that you are getting here, just like I said, it is just a re-entry opportunity until price gets your target. So if you know how to play your continuation, once price pulls back, you are getting more entries. Once price pulls back, you are getting more entry. So that's basically it concerning that entry. So I didn't even bother to check for more what's it called, for more re-entry, because I was okay with that one initial position. But if you want to get in more re-entries, still the same procedure. Remember those continuation formulas that I've explained over and over again on the public and the I guess my previous video. I explained some few continuation setups that I can work with. So for this now, price swept this relatively equal high and had a break of structure, right? So when price got that break of structure, meaning this place is already what a strong high for a range. So using premium and discounts from this high, you can apply that here for a re-entry. So price retraced into what? Into premium. When price got into premium, what do? We enter our position via this 0.618. So unfortunately, price missed the entry. At this spot, being a good selling opportunity, but that's that concerning that. So let's see if we could get a continuation entry if it was that Euro USD using the same approach. Euro USD. I'm just trying to show you, if you wanted to capitalize on re-entry opportunities, what you could have done. So the only valid place that price created opportunity was this price swept liquidity here. I can't consider this one as a sweep of liquidity because price was just ranging on that level. So we had the sweep of liquidity right here and a what? And a break of structure. So that place making a what? A protected high. Then for a re-entry, price pull back into what? Into the premium area. Yeah, this one is perfect. So price pulled back into the premium area. So when price pulled back, we have price entered that level. We have price retesting that same level right here. That same level right here. So that would have been a good sell position for a re-entry and cover your SL properly to continue the target, right? So that's that concerning that. Then for the second re-entry, price swept this high and broke structure, making it protected once again. So we have our prem and discounts right from this high. Price retraced into premium. There was no pullback, so let's just leave it like that. This would have been the second re-entry before price got to the last target. So that's how you apply the idea of this prem and discounts for entries and re-entries. Then lastly, the last position. This video is getting too long. For the euro card. So for the euro card, the same thing. So I'll be clearing my charts. So what are we doing? Higher time frame first. Where is price likely to go to, and where is price coming from? So on the week, this weekly rejection block this week right here. So that's where price was at that particular point in time. So when price got there, what kind of liquidity was taken into it? Previous week high. If previous week high liquidity is taken, where is price likely to go to? Previous day low, I mean. Previous week high taken, previous day low. That's where price is likely to get. So we are targeting this, targeting that. So that's that concerning that. So how do we enter? On the lower time frame, at that level, what are we doing? When price got there, so I don't need to talk much. If you have been following the first example for the Euro USD and the NZD, you should not have issue with this. So price took out this. When price took it out for the failure swing, right? Price did the mitigation to protect that high. So after price protected the high, the candlestick confirmation. This was the bullish candle that entered. This was the bearish candle that closed. Then what do? You enter your position, rise from the next candle, or you can actually set your order at the tip of the block, which is the rejection block. So that's where you set your order. Stop loss above. Then for your targets, we are targeting our what? Previous day low, right? Or if you missed this particular first move, price created another first move right here. Price mitigated this, swept this, right? Closed bearish, right? Enter your position from the rejection block that was created again. So that's another re-entry. So that's a simple candlestick confirmation entry you can apply on your point of interest. So further place is protected. So as you can see, price broke structure once again. For more re-entry, though I didn't take all this re-entry because those single positions were more than enough. So sweep of liquidity, break of structure, using the continuation entry formula that I explained, using prem and discounts, we have it from this high to this low, right? So price retraced into what? Into premium. Unfortunately, price did not come here, But if you are the type that have been capitalizing on this 50% part, not minding your size of stop loss, then you shouldn't have problem on that. So that's that concerning the re-entry. So that was the position right there, and I extended my TP as much as this low. The reason for that is beyond the scope of this video. Let's just leave it that way, like this. So that will be the end of the video. I don't want it to be more than 22 minutes. So I hope you enjoyed. Ensure you leave your comment on the stuff if you actually gained something new, and I'm sure you do.